All right. Today is Tuesday, July 6th. This is a recap for the stock market activities today. Ladies and gentlemen, welcome to the free market, or lack thereof. Because at this point, even communist China has a freer market than the United States of America. We see these weird phenomenons in the market happening every day. For example, overnight we saw interest rates, yields trading higher, along with oil prices, and we saw the Nasdaq futures trading down. But magically, right before the opening of the market, we saw yields dropping off the face of the earth, along with oil prices making a massive 180 reversal to the downside. In addition, we saw weird, suspicious activities in the morning for Apple and Amazon, trading as if they were meme stocks. Apple, in the first 30 minutes of trading, added about $50 billion to the market cap of the company. I don't know, did I miss any news? Did the iMob release new colors that perhaps merit an additional $50 billion to the company's valuation in 30 minutes? Maybe. But if you thought that was crazy, take a look at the action in Amazon stock, creating about $100 billion in additional market value in a single day. $100 billion. What happened? Did Amazon announce a stock split? Not at all. But we saw massive call options buying right off the gate. The moment the market opened, we saw massive call options buying for both Apple and Amazon. And these two single-handedly carried the Nasdaq to close in the green. And as I've told you during the last video, this reminds me of the summer of last year, where we saw the Nasdaq, big cap technology names trading impulsively higher on low volume and mostly via call options buying. We saw a massive gamma squeeze, a ridiculous move higher, defying all charts, and that was followed by a nasty reversal, marking a top for the Nasdaq and many big cap technology names for months to come. And back then, we found out that SoftBank, aka the devil, was manipulating the market higher via billions and billions of dollars of call options buying, creating gamma squeezes intentionally, also known as a pump and dump. And now we're seeing a similar phenomenon, where right off the gate we see massive call options buying for both Apple and Amazon, but in particular Amazon, because Apple has led the market in terms of options volume for a very long time. Yes, the options volume for Apple today was way above the average, but it is even more unusual to see Amazon, a very expensive stock, leading the options volume in the market. And now we know why. Somebody leaked the news ahead of time that the Pentagon is about to drop Microsoft from the Jedi contract, and that will open the path for Amazon to win the contract. Now, we know that Nancy Pelosi, the Speaker of the House, was buying Amazon call options ahead of time. Remember, she bought Microsoft call options before the Jedi deal was announced. Now she bought Amazon call options. Of course, it's not Nancy, it's her husband. And they say, oh, she doesn't talk to her husband. Really? Give me a break. She buys call options for Amazon ahead of time. And in the morning, and by the way, not just in the morning, starting last week, last Friday, we saw massive call options buying activities for Amazon. The news was leaked ahead of time. And we have these entities and personalities cashing in on insider trading. You think the SEC will do anything about it? Of course not. We will cover all of this news during the headlines of the day video, including the Nancy Pelosi news, what's going on with OPEC, the announcements from AMC management today. We'll cover all of that in the headlines of the day video. But for now, let's move on and see how the market closed today. And here we go. The Dow Industrial Average closing in the red, down 208.98 points, shall we say 209 points, or a decline of 0.60%. The Nasdaq closing in the green by 24.32 points, or a gain of 0.17%. The S&P 500 closing in the red, down 8.80 points, or a decline of 0.20%. What about the sector's performance today? Leading the pack at number one, but not capturing any medals because the performances were pathetic across the board. Apple, Amazon closing the day with gains over 4%, but the Nasdaq barely closing in the green. That tells you that there is weakness in this market, regardless of the performances from Apple and Amazon today. At number one, technology at number 2, real estate at number 3, utilities. Barely in the green. Meanwhile, the laggards of the day, the inflationary trade led by energy, materials, and financials. And here it is, perhaps the most important piece of information we have today, the advance to decline ratio. The NYSE 22% advancing versus 76% declining. The Nasdaq, pay attention here. The Nasdaq managed to close in the green. The performances of Apple and Amazon were impressive today. However, when you look under the hood, you see a lot of problems for the Nasdaq. 25% advancing versus 72% of the volume today on the declining side. So the Nasdaq was carried single-handedly by Apple and Amazon. But beside that, the Nasdaq should have been down by a lot today. Moving on to futures. What's going on here? The US dollar started trading in the morning to the downside, but it caught support at 92 and it managed to bounce higher. So in the morning, we started to see futures, specifically for metals, trading a lot higher, whether we're talking about gold, copper, silver. But once the dollar started to rebound from 92, we saw a reversal in gold, copper, silver. Some of these managed to close in the green with gains, but yet the performance was a lot better in the pre-market session. And right away you see gold and platinum closing in the green for metals futures. Meanwhile, we have losses for silver, copper, and palladium. But the main story remains in the oil market. Last week, we went through the OPEC fiasco. They walked out of the meeting, they had a big disagreement, and no decisions were taken one way or the other. And now we're hearing more and more about this rift between Saudi Arabia and United Arab Emirates. One side wants to stick with the plan and see higher prices in crude oil. The other, the Emirates, wants to start pumping oil and exploiting the elevated prices right now. So we're going to have this tug of war between the side that wants to see higher oil prices and the side that wants to exploit the higher oil prices, saying that 75, 80, that's good enough. Let's start pumping right now. And throw the United States in the mix with the Biden administration. And now you have a lot of uncertainty regarding oil prices. The trajectory was for oil prices to rise all the way to at least 80 to 85 by the end of the summer. We even heard calls that oil prices will reach $100 a barrel by the end of the summer. Now we have a lot of uncertainty because the rift between Saudi and UAE caught the attention of the Biden administration. If the Biden administration changes policy, crude oil prices will collapse because this rally has been building on fragile bases. We have Delta, the new variant, challenging the bullish outlook for crude. And now you have this inner fighting between OPEC members, and in addition, we have the Biden administration getting involved now. We will discuss this dynamic during the headlines of the day video. But for now, we know that WTI closed in the red, a massive reversal overnight. The WTI was trading higher to the tune of about 2%. It closed the session down 2%. So this was a massive 180 reversal. What about softs? Lumber, look at that, rebounding by about 5% today. And I bought some lumber contracts. And the reason is, charts-wise, lumber looks like it is bottoming. When you look at the chart of lumber, and this is the current contract, by the way, I bought the September contract, but it doesn't matter. This is for illustration purposes. You see the momentum indicators bottoming, whether it is the RSI or the MACD indicators. Massive oversold conditions, and we're starting to curl higher, registering green impressions in the histogram of the MACD. That tells you that at least we will have a short-term bottom and a short-term rally in lumber futures. In addition, if we see yields, interest rates continue to collapse, breaking 1.35 on the 10-year, then mortgage rates will follow. If mortgage rates drop down, remember, when you talk to home buyers, quote-unquote potential home buyers, they say prices are out of whack, we're sitting on cash, we're waiting for the crash. Well, the crash is never going to happen if everybody's thinking this way. The crash will happen when everybody has FOMO, rushing and running toward the slaughter. For now, so long as people sitting on cash waiting for the crash, it will not happen. Likewise, in the stock market, you hear a lot of talk about, oh, stocks are too expensive, I'm waiting on cash, waiting for the crash to buy the dip, yada, yada, yada. Well, it's not going to happen if all of us are thinking this way. When it comes to the housing market, if mortgage rates starts to drop down, those people waiting in the sidelines will rethink their strategy and will stampede once again to buy homes once they realize that prices are not going down by much, but interest rates, in this case mortgage rates, are going down. Perhaps this is an opportunity to start buying right now before rates climb higher once again. We will see a second episode in the housing mania, sparking home builders to resume their construction projects in adding supply to the market. You know, when we talk about the oil market, for example, crude oil prices could go higher and higher and higher, but it is a game of musical chairs. At some point, the price will get too high, and either shale oil producers here in the United States will start producing again, or one of these OPEC countries, or perhaps Russia, even Iran, will start dumping oil in the market, increasing the supply, and we will see a crash in oil prices. On the other hand, this is the inverse. When it comes to lumber prices, it will only take one home builder to look at the chart of lumber and say, you know what? It went down by a lot. And perhaps this is an opportunity since the demand is surging again due to low mortgage rates. Perhaps this is an opportunity to start buying lumber because we're not going to have better prices, at least in the foreseeable future. And right there, this home builder buying the dip in lumber will spark a frenzy of dip buying in lumber via home builders because as the chart starts to rally higher, they will start panic buying lumber because everybody was waiting for a bottom right now. Perhaps we didn't see the bottom yet. I'm waiting for better prices to start buying lumber. Well, if this is the bottom and lumber rallies back to 1,000, watch out for the stampeding that will happen from home builders to buy lumber. This is at least my take in this matter. Aside from lumber, we saw a bad trading day for soft futures, losses led by OJ, coffee, sugar, coca, and then cotton futures closing pretty much at the flat line. What about meats? Better day than softs. We're seeing gains for feeder cattle, lean hogs, and live cattle futures. Of course, we're watching lean hogs futures carefully because we saw a massive correction in the last few weeks. The question is, as with lumber, where is the bottom for lean hogs? Lastly, what about grains? We're having a bad picture here for grains futures, and the reason is, while the western United States is experiencing extreme drought and extreme temperature, we saw a lot of moisture arriving to the Midwest United States, where the majority of soybeans and corn is harvested. The losses led by corn, soybean meal, soybean oil, wheat, oats, rough rice, and canola futures, all closing in the red today. Massive losses specifically for corn, soybean meal, soybean oil, all registering losses by more than 4%. Now, if the US dollar starts to top and we see a massive reversal to the downside, grains futures will stabilize regardless of the weather outlook. We will see a bottoming process and perhaps a start of a new rally in grains. And before I move on, I want to share these charts with you because I forgot to do so earlier. Chart number 1, this is for light crude futures. We are reaching the resistance level. This is a monthly chart, by the way, of about 77. And this was pretty much to the penny, the highs of the day before we saw a reversal to the downside. The level of 77 was pretty much the top in 2018. And in the past, the level of 77 acted as major point of support and resistance throughout the years. So the question is, are we topping here, at least in the short term? Because this will be a difficult level to break above. It's not going to happen so easily. So the question is, are we about to see a pullback all the way to reach the descending trend line, retag it for support, and then rallying higher once again to break above 77 once and for all? That is at least my projection for now. Here's another chart for copper, and I had this trend line going on for months now. I did not draw this line today. It has been here since the last time I shared the chart of copper with you. And if you notice today, copper in the morning rallied all the way to the ascending trend line, the positive trend line that is, and it failed to recapture it. It failed to break above the trend line. Is this a rejection signal? Is it over for copper? Not really. We're seeing the MACD and the RSI indicators strengthening. The chart of copper did not break the support of the Fibonacci retracement level around 4.2, which means that for now, copper still has enough energy to give it another shot to break above the trend line. But if it fails again, getting rejected, breaking the support of the Fibonacci retracement level, then we have a bigger problem in copper futures. And that will come hand in hand, by the way, with a massive pop in the US dollar. Now, I don't see that happening in the horizon. I see the US dollar topping at this point. But this is the tug of war, the battle between who's telling the truth. Is it the US dollar that is still holding the support level of 92, or is it gold and copper who are trying to bottom and attempting to rally higher? One of these two will be victorious. Team gold and copper or Team US dollar. Moving on to the options market, the big casino. Here it is, Apple at number 1, the hottest table by far. And the majority of call options buying happened early in the morning, by the way. The first hour of the day saw massive call options buying activities for Apple, closing the day with about 2.8 million contracts traded today. About 81% of those were calls. Think of that. 81% of those were calls. And here it is, one of the biggest stocks in the world, but not an active options trading stock due to the elevated stock price. But today it closed at number 2 with about 800,000 contracts. About 72% of those were calls. It started in the morning. They started buying call options in the morning. And by the way, not just in the morning. Since last week, the news was leaked ahead of time. They knew exactly what's going on with the Pentagon deal, and they started buying call options since last week, but heavily today in the morning. And as we got the confirmation when the news came out that the Jedi deal was being scrapped, Microsoft is not having the contract anymore. Perhaps that means Amazon will win the contract. Right away, you saw a massive stampede to push Amazon shares higher via buying call options. And the winner here, of course, is Nancy Pelosi. She was the early entrant to the trade. I wonder how. How did she know that the Pentagon is about to scrap the deal? Anyhow, Amazon closing with about 800,000 contracts, about 72% of those were calls. And here it is at number 3, Tesla, the souffle, with about 650,000 contracts, about 46% of those were calls. The souffle needs Nancy Pelosi to start buying call options because it seems like more people are betting against the souffle, buying put options instead of call options. We have AMC still elevated. Perhaps the apes need to recruit Nancy Pelosi to start aping with them. You want to panic the shorties into covering? Get Nancy to join your team. What about the unusual activities taking place in the options market today? And by the way, I get this question a lot. How do you know if this trade is a buy or a sell? Folks, these are trades. Every trade you see here has a buyer and a seller. It doesn't matter whether it is a buy or a sell. You're not going to know who initiated the trade, but the assumption is that it is always the buyer that initiates the trade because the seller, in this case the market maker, they already have the shares. They own the stock, whatever stock that is. When you go on your Robinhood account or whatever broker account and you request buying call options or put options, the market maker in response will start selling you these options. So this is the assumption. Yes, certain trades are initiated as a sell, but the assumption here has to be that buying initiates the trade, not selling. But at the end of the day, there are two sides to every trade. There is a buyer and there is a seller, and they are betting against each other. Likewise, how do you know if certain trades are spreads or strangles, straddles? I watch the options volume live. If you have a Bloomberg terminal, you will see those trades happening in real time. But even if you don't, if you use bar chart, as I'm showing you right here, you can read it right away from the volume, the time it was initiated. It is pretty easy to spot the trade and identify whether it is a spread, straddle, strangle, etc. just by studying the volume and the time in which the trade was executed. Anyhow, back to the unusual activities table, starting with the ticker triple Qs, the Nasdaq. Somebody's buying the 390 calls, betting for more upside for the Nasdaq. With the expiration date August 20th. They're expecting the Nasdaq to rally by over 8% by then, and they paid about 65 cents apiece to enter this trade. All in all, bringing the total to about $1.5 million. Here it is. What about the trade for the ticker Amazon? The ticker AMZN. That's Amazon, in case you didn't know. Nancy bought the 3,000 calls, but somebody's betting for more gains to come here, a gamma squeeze, by the end of this week. And they're buying the 4,000 calls with the expiration date of this Friday, July 9. Expecting Amazon to rally by over 9% by then, okay? And they paid about $3 a piece to enter this trade. All in all, the entry cost was about $3 million. What about the trade for the ticker PFGC? This is for a company called Performance Food Group. The name traded down today, but somebody's betting for a rebound to come. By buying the $50 calls, expiration date August 20th. With expectations that the name will rally over 6.5% by then, and they paid about $1.60 a piece to enter this trade. All in all, bringing the total to about $1.5 million. What about the trade for the ticker IWM? Notice the divergence, by the way. The Nasdaq trading higher, Dow is trading down, S&P at the flat line. Meanwhile, the Russell 2000 is getting whacked, and somebody's betting for more pain to come for the small cap index. By buying the 214 puts, expiration date July 30th, with expectations that the name will drop by over 5% by then. They paid about $1.60 a piece to enter this trade. All in all, bringing the total to about $1 million. Lastly, what about the trade for the ticker AAPL, Apple, aka the iMob? Here is somebody betting for a contrarian trade. We have a bear here. We spotted one because they're buying the 134 puts, expiration date August 6, with expectations that the name will drop by over 5.5% by then, and they paid about $1.60 a piece to enter this trade. Notice that every trade is $1.60. Anyhow, that brought the total all the way to about $1 million. Moving on to the heat map analysis. And right away, the picture could not be any clearer. The inflationary trade is getting whacked. And the reason is the action in the bonds market that is adding downward pressure on financials, energy, industrials, and materials. But the high multiple names did not do so good either. You have names like Tesla, NIO, the Chinese names, not performing pretty good. But this is the beauty of doing the heat map analysis. What names are rallying today? We talked about Apple and Amazon being pumped via call options. We have some of the high multiple names, the likes of Square, Shopify, also getting pumped higher. But why is Zoom trading higher? Impulsively so. When you look at this action, combine it with the action in the bonds market, you can't help to wonder, but to ask the question, why are yields trading down? Even though we continue to get macroeconomics data suggesting that inflation continue to rise higher, perhaps to the point where it is creating stagflation. Now, explanation number one, and that's already behind us, the taper tantrum. We're already past that. The taper tantrum happened, the Fed responded by doing a 180 from a hawkish stance to a dovish stance, saying, you know what, forget about Bullard, Kaplan, all of these clowns. Me, Papa Jerome, Clarida, Williams, and the likes. We're going to wait and see for more data before we start tapering. And we will let you know ahead of time. Did we say that we started talking about tapering? Well, forget about that. We're going to go back to not thinking about tapering. So what other explanations are there for the action in the bonds market, but also the stock market, specifically Zoom, for example, as if the market as a whole, the bonds and the stock market, trading as we're still in the pandemic, taking a page of 2020, the trading action that we saw last year. So that is sparking the debate. Is this a reaction to the Delta variant? We're seeing lockdowns in Asian countries, Indonesia, for example, South American countries, and some European countries starting to lock down again. Oil prices going down, Zoom trading higher, bond prices going down, bond yields going down. As if all of this progress we've made in vaccination, reopening, reinflation is starting to evaporate. So is the bonds market and the stock market, at least from the action in Zoom, for example, predicting something to come regarding the Delta variant? I remain skeptical that this is the real reason, because the bonds market has been reacting the same way before we ever heard about the Delta variant. Explanation number two is the technicals. We covered that last night by talking about the TLT's chart. The market is under low volume. The algos follow the technicals. The technicals say bond yields down, Nasdaq goes higher, etc. Explanation number three is the bond market looking forward and seeing stagflation, or economic growth, economic activities starts to plateau, slow down, and even trend to the downside. Meanwhile, prices continue to stay elevated. To me, that is still a weak explanation because last time we saw stagflation, treasury yields were actually trading higher. When you reach stagflation, the Fed has to intervene by tapering assets purchasing programs, namely bonds, and that pushes yields higher. So I'm not leaning toward the stagflation or the delta variant. I'm leaning toward following the technicals for now. We will see how this delta evolves in the days to come. Moving on to the charts analysis, starting with the SPY 30 minutes chart. What's going on here? Again, we were expecting the path of least resistance to trade higher. And this is exactly what we got in the morning for about a minute or so. And then the SPY started to flush down. We saw an inverse picture between the Qs and the SPY. Qs going higher, SPY going down because financials, energy, industrials, metals, the inflationary trade was getting whacked in the morning. But the beauty of this chart is the fact that today's action gave us new support and resistance levels. Here it is. The gap was closed. The SPY's chart went down all the way to the gap, closing the gap and then rebounding higher. Now we know the 430.5 is the support. Meanwhile, the resistance at 434. What do you do with this information? Closing the gap, bouncing higher, should merit the SPY to go all the way and challenge the resistance level of 434. Now, if the SPY fails to do so, reverses before reaching 434, then you know right away that 430.5, the support level, the new one, will not hold, and the SPY will trade to the downside, perhaps all the way to the next support level of 425.45, or shall we say 425.5, that makes it easier. But mind you, we have small gaps before that level is reached, so we're expecting to see some reactions around these gaps. This is exactly, by the way, what happened to the IWM chart. Failing to reach the resistance level after a double bottom formation was the signal that you should bet against the IWM. So again, if the SPY reverses before reaching 434, you know right away that we have a top on the chart. What about the daily chart for the continuous contract for the SPY? Notice that the volume is spiking higher, but this time around it is spiking higher on the downside. Matter of fact, the majority of the volume was in the first hour or so of trading when the SPY was trading to the downside. Once the selling stopped, we saw dip buying and the SPY managed to close pretty much at the flat line. So this is a worrisome signal, but it is not a solid bearish signal meriting a short trade because you have the momentum indicators, the MACD, the RSI still trading in positive divergence, still has plenty of room to go before becoming quote-unquote overbought. We don't have any reversal signal from a candlestick pattern. There is no reverse hammer, there is no gap and crab, there is no gapping down on higher volume. We're not seeing any of that. If anything, the dip was bought aggressively today, granted with lower volume than the selling, but that tells you that the appetite of supporting the market right now is still here. What about the Qs? 30 minutes chart. Similarly to the SPY, we got a new resistance level at around 360.5. So we're going to work with this one. Unlike the SPY, the Qs did not go all the way down to close the gap before bouncing higher. We saw a sell-off, the Nasdaq trading in the red for a little while, even though Apple and Amazon were trading in the green. You're not going to hit the Nasdaq when Apple and Amazon are trading in the green. You need these two trading severely in the red to merit any reversal. So those of you who are watching the chart on real time and you're being seduced by a flush down in the Qs midday, convincing you to enter a put options trade, this was a bear trap. You gotta watch Apple, Amazon, and even Microsoft. If these are still trading in the green, forget about the Nasdaq reversing anytime soon. For now, we're working with 360.5. This is the resistance level. We saw a V-shaped recovery. Buying the dip now, 360.5 becomes the next test. Can the chart break above the resistance level? We're looking at the RSI from a 30 minutes perspective. We have a negative divergence, even though the chart is trading pretty much at the same highs it reversed from. What does that say? This bounce higher, this V-shaped recovery is a lot weaker than the first leg that took us higher to face the resistance of 360.5, meaning that there is weakness here. Is it a reversal signal? Not yet. You don't have that yet. For now, this is just a sign of weakness. What about the daily chart? Continuous contract for the Nasdaq. Are we seeing any reverse hammers on the chart? Are we seeing any gap and crap? Are we seeing any gap down on higher volume? We're not seeing any of that. For now, we don't have a reversal signal yet, but the momentum indicators are getting extremely extended, putting that reversal closer and closer and closer. Can you do anything with this information? Of course not. You cannot initiate a trade at all. If anything, the only trade you can initiate right now, if you're already long the Qs, is start taking profits off the table. And by the way, another indicator for an upcoming top in the Qs is Apple. I always say as Apple goes, so will the Nasdaq. What's going on with Apple today? The options volume is getting elevated with heavy call options buying activities. Now, Apple has been rallying in stealth mode for weeks now. As the Johnny-come-latelys come to the picture, buying call options aggressively in Apple, that is an indicator that the top is getting close. If Apple goes down, it will take the Nasdaq down with it. When a trade becomes overcrowded, that is usually a sign that a top is imminent. And we're starting to see that in Apple right now. Moving on to small caps, the IWM 30 minutes chart. We talked about the bear flag formation at the support level of 229. I said grab the popcorn and watch what happens. Well, it played out as expected. The bear flag played out as expected, going all the way down, very close to the next support level of 223, before bouncing higher. It is not a convincing bounce, by the way. It is a weak bounce, perhaps some shorts taking profits by the end of the day. So I'm not sure that the pain is over here for the IWM. I want to see it go down all the way to 223, perhaps closing the gap just below that number, and then bouncing higher. That at least will give me a conviction that the support level was met, the gap was closed, and the chart has satisfied all the shorts who started trading based on the technicals. The shorts have a destination to reach. They're looking at the same chart I'm looking at right now. They know about the gap. They know about the support level of 223. They have a goal, a destination before closing their shorts. I much rather buy the dip in the IWM after all of these goals and destinations for the shorts are met, so I can ride the wave higher with them as they start covering their shorts. What about the Dixie, the dollar index? What's going on here? Overnight, the Dixie went down all the way to 92, only to bounce higher, catching the support of 92. The RSI, the MACD, still very strong, giving the possibility that the Dixie still has the room to run higher. Perhaps it wants to go all the way to 93 before topping. There is no doubt that both the RSI and the MACD indicators are running out of gas, meaning that we're looking for a top in the Dixie, just like we're looking for a top in the Nasdaq. But that doesn't mean that the Dixie or the Nasdaq, for that matter, will reverse the very next day. It's called a process for a reason, a topping process, a bottoming process. We are now at a topping process in the US dollar. We are at a bottoming process in gold. When will these play out? You're going to have to watch for a confirmation in the candlestick patterns. Speaking of, here it is, Goldie Gold. What's going on here? It was trading higher in the morning by over 1%, but as soon as the US dollar started to trade higher, bouncing from 92, we saw gold reversing, not all the gains, keeping some gains, but closing the session well below the highs. Is it over for gold? Of course not. The momentum indicators are in a bottoming process. Do you trust the Dixie bouncing from 92, or do you trust the action from gold today? Which one is telling the truth? Both are trading higher today, hand in hand, but one of them is lying. And my call is the Dixie is the one lying, and I'm going with gold. We'll see if I'm right or wrong. Moving on to yields, specifically the 10-year yield. We talked about a saucer bottoming process. That will not happen if the last bottom of 1.35% is not defended. What you want to see is, if you are bullish on this chart, is a double bottom and for yields to start to pick up steam higher, breaking the descending trend line. Absent of that, we will see lower lows in yields, prompting bond prices, the TLT, to continue to march higher. When you look at the weekly chart for the TLT, the momentum indicators are in positive divergence, and we still have plenty of room to go, perhaps all the way to 149, 150. That will come hand in hand with yields trading at 1 1.3, perhaps below that number. If that happens, you know that the Nasdaq, the high multiple names will start to outperform and we will see the inflationary trade getting whacked once again. The only scenario when yields get crushed and the market as a whole goes down, Nasdaq, Dow, S&P, inflationary, not inflationary, all going down, is a panic situation. What will prompt such panic? How about Delta? Welcome to the neighborhood. Moving on to the VIX. What's going on here? 4 hours chart. We talked about the last crossing in the MACD indicator as perhaps the appetizer before the main course. We have a triple bottom for now. The VIX is trading in green territory once again in the MACD indicator. And for now, that prompted a pop of about 20%, surpassing the appetizer pop of about 13%. Is it done? We saw a 180 midday. As the SPY started to recover, the VIX started to turn to the downside. For now, looking at this chart, we don't have any sign that the pop in the VIX is over yet. There is plenty of room in the MACD indicator, the RSI indicator, for the VIX to trade all the way above 20 comfortably in one shot. And that will come hand in hand with a reversal in the SPY. So you got to watch both charts here in real time. The 4 hours chart of the VIX and the chart of the SPY. For example, let's say that the SPY trades higher, gapping higher, and then midday we start to see a massive reversal, a flush down, coming hand in hand with the VIX trading higher, perhaps all the way to 20. Now you got your confirmation for a market reversal. Until then, we have nothing. What about Apple, the big kahuna? What's going on here? 30 minutes chart. You're seeing that massive cartoonish candle the first 30 minutes of the day. This is not a meme stock, by the way. This is the biggest stock in the world, but it was trading as a meme stock in the morning, creating value of about $50 billion in 30 minutes. And by the way, that's nothing to what Amazon has created today. $100 billion. Now, let's do this exercise. You saw what the SPY and the Q's chart gave us today. What did the chart of Apple give us today? It gave us a support level to work with. And this support level is at 140. And to be exact, it's around 140.15, 140.20. But for simplification reasons, we'll use 140. How does that help you trade Apple? Well, breaking the support of 140 will initiate a shorting signal. And the reason is, number one, 140 acted as a launching pad in the morning for Apple. Number two, midday when we saw a sell-off, the pump and dump, 140 acted as support and Apple managed to bounce from that level, closing pretty much very close to the highs of the day, meaning that 140 is supposed to be solid support. And if 140 is broken, that will be a reversal signal of the bullish trend that has been going on for weeks and weeks in Apple. Conservative traders will wait till the chart breaks 138 before confirming any reversal. But the bears with the cojones will start shorting as soon as 140 is broken. What about Tesla, the souffle, one of the most interesting charts today? We talked about 679 as an extremely important resistance level. Breaking above that level will unleash a rally in the souffle's shares, perhaps all the way to 720. What happened today? We saw a pullback away from 679. A lot of traders saw that as a signal to start shorting the souffle, not this guy you're listening to, because we have a gap at 657. The chart went down all the way to 657 and then it bounced higher. For now, the bull flag is still intact. Matter of fact, it got stronger. And the reason is the chart put the gap behind it, closing the gap and bouncing higher. The problem is the missing piece. The chart did not bounce back all the way to 679. Had that happened, I would have bought Tesla souffle shares with both hands. I will buy call options, of course. I'm not going to buy shares because it's garbage at the end of the day. But I would have bought a trade via call options. What is keeping me around the edges is the fact that there is lack of conviction in the bounce after closing the gap. So we have to wait and see what happens starting tomorrow, for example. Will the souffle bounce all the way back to 679? That will be extremely bullish. Or will the souffle trade below 657, closing the gap and failing to bounce higher? This is always an ominous signal and perhaps a shorting signal. So watch for 679 and 657. Moving on to tulips, BTC, what's going on here? Nothing new. Still consolidating underneath 35,750. For now, there's nothing you can do here until we have a resolution. Now, if you ask me, if you had to place a bet right now, this moment. Will you place a bet that BTC will break above 35,750? Or will you bet for a downside, that the chart will fail to break above 35,750, and that means that the chart is going back to 30,000? Which bet will you take right now? I will take the bullish bet. I will take the bet that BTC will break above 35,750. And the reason is, for now, the formation of the chart is creating higher lows in the consolidation. Remember what happened with Tesla when it was consolidating underneath 629. It was pretty much identical to the formation we're seeing right now with BTC, creating higher lows, and eventually Tesla managed to break above 629 once and for all, and that resulted in a massive pop higher, and the chart went all the way to 679. Are we about to see the same thing in BTC? If I had to bet one way or the other, I will bet that we will see what we saw in Tesla in Bitcoin. Lastly, what about AMC, the apes? What's going on here? We got some good news in the morning that the management and CEO Adam Aron will not issue more shares, dumping on the heads of the apes. In many ways, the management of AMC is recognizing the sheer power of retail traders who bought this name. For now, the apes put their money where their mouth is. They bought the stock and they continue to hodl. Diamond hands. They're not selling, they're not panicking, and that is keeping the price stable. The problem is, you got some good news today. Why didn't the shares trade higher? Why did we see the stock trading down on the heels of good news? Well, the reason is that the apes are running out of ammo. Even if you have good news, what are you going to do? Are you going to buy call options? You're going to buy the stock? You're already all in. You need to recruit more apes to push this thing higher. Otherwise, the patience will run out. Somebody will hit the sell button, and that will ignite a cascading effect in the form of a sell-off. My advice is, call Nancy Pelosi's office. Say, hey, Nancy, buy some call options in AMC. We're going to the moon. And see what she says. Maybe she'll help you guys out. Who knows? Moving on to the conclusion of this video. What do we have on the economic calendar tomorrow? We have jobs opening, and again, this will be important to pin the last number we got, the 850,000 jobs created in June. We have to pin that against jobs openings, because the number might look impressive on paper, but if jobs openings continue to rise higher, then the number is not impressive anymore. Then we have the FOMC minutes. Again, we already got the meetings, we got the decisions. Unless there is a surprise in the FOMC minutes that was not disclosed before, this is not important at all. And then we have Boystick speaking. Let's see what he's going to say regarding tapering. Is he in the camp of Clarida, Powell, and Williams, or Bullard, Kaplan, and Harker? My suspicion is, the longer we see this Delta variant problem spreading across the globe, the Fed will become more cautious. And you're going to see Bullard, Kaplan, and the rest starting to say, well, there is uncertainty regarding the new variant. Perhaps the Fed needs to be more accommodative in the foreseeable future until the virus picture clears up. And of course, the Delta variant is bad news. And remember, bad news is good news for the stock market, specifically the Nasdaq. So along with the market, I am watching how Delta is evolving and how the bonds market in particular is reacting to Delta. Anyhow, stick around for the headlines of the day video, which will come out later this evening. We got a late night show for the adults. Anyhow, that's all I got for you for this video, and I will talk to you again very soon. If you found the information presented in this video helpful, please subscribe, press the like button, the notification button, and follow me on social media.